Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Fresh Agenda, Everag's Global Insights team. And Steve, we're back this week with a bit of a market update, an overview of this week's Pulse event, the outlook in 5 pitches, because you're just getting ready to mail the outlook to subscribers later this week.
Tomorrow.
Yes. Mm-hmm. And, of course, chat of the week. Let's get into it.
Let's kick into it. We always go to the European butter market. There's a lot of talk around it. It has started to relax, not that you'd know it from the forward curves on futures, but we are seeing the nearing of that cliff face and just going to look at these spot prices that have started to show some action here, that we've seen spot milk go down and back up again. Butter's come off a bit in the last week in terms of spot quotes. Cream goes higher. But, it is it's a matter of days or next couple of weeks before we'd expect to see this come off. We'll talk a bit more about this later, but that's, still a very dynamic space.
Yeah, and then back over the other side of the pond in the US, we're seeing on the CME these cash-settled cheese futures, Steve, just with that distinct swag forming or at around January next year. But the futures market seems to expect that we'll pretty much be back where we are right now towards the middle of the year, despite a whole lot of additional supplies coming on stream from these new sites we keep talking about, and pretty tepid demand, Steve.
We'll talk more about this later in this segment. And the butter market's also quite weak, and this is also a trend. We just see that futures go just continue to fall each week. Abundant cream, more milk coming, even though, a lot of that new growth is expected to be soaked into cheese. They will generate more cream out of that product stream. Stocks appear fairly comfortable. There might be a rebound in demand with prices going lower and promotions could kick up, but still, pretty weak outlook there.
Yeah, the latest stocks information, it was a big drawdown to October, but yeah, as you say, stocks at pretty comfortable levels for this time of the year. So be interesting to see.
So overnight, the Pulse, Joe, what did it tell us?
Yeah, look, it was, again, both powders lifted prices on this week's Pulse compared to last week's GDT auction. Whole milk powder did the best, up 2.9% on last week's GDT and 2.8% up on the prior Pulse event. So still looking reasonably healthy curve there, Steve, comparing those events. And for skim, it was a little bit more subdued, just $5 a tonne up on the previous GDT auction and down $20 a tonne or just 0.7% on the prior Pulse event. So just going sideways a little bit there, Steve.
Isn't it interesting when you look at those different headings that a Pulse event gives? From time to time with whole milk powders tends to be something that it's pulling up. You see the Pulse. I must redo my nerd out on that stuff again.
You must.
To just look at the consistency of that. But Pulse does send an interesting signal which doesn't occur in skim. Okay, this is the challenge, the outlook in 5 easy picks. I'll start. We're going back to the European butterfat market, but this is the seasonality comparison where we're looking at the record over a number of years of what's typically happened in butter, spot milk and cream and how the current year compares. And that is quite a stark contrast. We're expecting, you can see the cliff that we talked about earlier is just nearby. So it's just the uncertainty here is, when does this correct? What occurs beyond that? And do we see that, the typical slowing into the new year with abundant cream? Milk is picking up pace, but there's a lot of headwinds around milk supply. And I guess that's the difference at this point in time. There's a lot of uncertainty there. On the other side of the equation, milk use with the cheese market starting to get some pushback in cheese values might mean a bit more of the milk goes to skim and butter because of the nervousness of overproduction of cheese. So plenty of uncertainty there. We'll run the usual set of scenarios on this in our outlook to just illustrate what can happen when we play with some of those assumptions out there.
Yeah, and then the other interesting area that you're looking at, or we're looking at the outlook, is what's happening with China's this all leads to what's happening with China's import demand. But this is some modelling done of China's whole milk powder stocks to use. And the orange line is the likely target level of stocks to use that they seem to be aiming for. The dark blue line is approximately where we think we are in 2024. So stocks to use a lot lower because the market is lower and demand is still quite sluggish. A lot of assumptions between that orange 2025 line, Steve, of course, on milk output, local milk output, how much will be used in fluid consumption, what internal whole milk powder demand will be, and therefore what the import requirement will be. So an interesting one to watch there, Steve.
Sure. I mean, it's kind of a long story, but it's China adjusting to a lower demand expectation. 23 is the hangover from the expectations of the past. We just carried a lot longer, a lot higher level. But now we're adjusting to a new level. That's, it's a scenario, Joe. It's kind of this is what we think is likely to be the pattern, but there are many variables tossed into it. In the US, this cheese market outlook, and really the question is what happens when, we've got higher output, which is expected to be pushed out at a lot faster pace than what demand will soak up. And I guess to understand now that futures line there, that's showing a futures line in that black line through 2025, why we sort of say that fundamentally doesn't look like it's a fair reflection. And so our fundamental values is lower than this number. But when you look back at the relationship over time, that gives you that clue. Whenever we've had an oversupply, when the lines are green and strong oversupply with the green lines above the line there, we've seen a middling of price around that $1.50 level, which is long-term average. We have seen some exceptions to that in 22 when we saw, all boats lifted when we had that huge commodity boom at the time. But when you bring it back to a recovery from what is tight supplies through 24 into the expectation of 25, that appears to be a high number in that forward curve. So we do a lot of other analysis around this, but that's suggesting that we're in for a much lower trajectory than what futures is suggesting.
Sure. And now turning to New Zealand, back in this neck of the woods, New Zealand milk production has been really strong this year. We've talked about it a few times, up 5% year to date at the peak month. Really great pasture conditions. We've got improving financial outlook. We've had Fonterra announce an upgrade to their forecast payout to $9.50 a kilogram milk solids, and some of the banks now forecasting it'll get to 10. Firstly, how much will this milk growth taper in the second half of the year? The likelihood of a La Nina is very, just a 50-50 chance. So it's in the lap of the weather gods. But we've already added about 44,000 tonnes of milk solids to the product mix that goes in and out of New Zealand factories. So what impact's that going to have? Whole milk powder, obviously looking a bit better in terms of demand, but that's still going to be carefully managed, you would think, out of New Zealand. What does that mean for the balance that goes into butter, skim milk powder and skim milk concentrates, Steve, for the rest of the year? Is going to be an interesting one to watch.
That's right. And the fifth of our pictures, there's a few issues behind this one. So this is a consensus we've just pulled from Bloomberg as source there for a generally steady US dollar against other currencies. But this issue opens up a whole uncertainty, the uncertainties of policy shifts on a number of fronts with the incoming administration, on trade relationships, on the US fiscal policy, and of course geopolitics and the influence on the wars in Ukraine and the Middle East. So, a lot of these things just can't be modeled because we're talking about, differences in policy stance. It may have a number of knock-on effects, but there is a lot of uncertainty hanging over trade going into the new year with that factor. All right. So chart of the week, Joe. What have you got?
Yeah, and chart of the week, sort of bringing it home again to this neck of the woods. We've just got some New Zealand export data for October that's dropped. New Zealand exports were up 4.7% year on year in milk solids equivalent terms. Whole milk powder exports were up 5.3%, so a big driver, obviously, of that overall milk solids equivalent results. And New Zealand whole milk powder shipments to China more than doubled for the month of October. So, an encouraging sign that we've seen the greater involvement or the more consistent buying on GDT auctions over a number of months, and that's starting to flow through into these trade numbers. Also seeing some, more modest increases in trade into Southeast Asia for whole milk powder. Skim milk powder trade was less interesting, and again, this lines up with what we're seeing in those Pulse and GDT auction results, right? Down 0.6% for the month of October. China was up 15% year on year, though. So, overall, some pretty good results in terms of whole milk and skim milk powder demand out of New Zealand.
All right. Well, that's all from us this week. Thanks for watching. We'll be back again next week.